G'day fellas, just a quick one here to talk about accounting for a continuing business. Now you need to understand that all of the questions that you've done so far, they've all had one thing in common. They all start with, this guy starts a business. And he might put some money in, and he might put some equipment in, and maybe some property in, and he starts the business. But most of the accounting you'll be doing is not at the start of a business's life. It's throughout the business's life. Now what we do is break up the business's life into what we call accounting periods. Okay, accounting periods. And at the end of each accounting period, might be at June 30th, we sort of close off the books, and then we open them again on July 1st. So this business is not a business that's getting started, it's a business that's continuing. So let's look at what you do in a continuing business situation. Okay, so here's the sort of question you might get. Bobco starts July 1st with bank $5,000, AP $9,000, vehicle $10,000, and capital, I don't know. I might just change the word starts to the word continues. Okay, so it's a business that's existed for quite a while, and the accounting period is starting again July 1st, and we need to account for this stuff in some way. Now, there is no transaction taking place here. Okay, and remember that transactions are recorded in the general journal. Okay, so every transaction you've done, every sale return, every purchase, every injection of capital, all of that happens in the general journal. But this isn't a transaction. No one put any money in, no one took any money out. It's just continuing. It's just what it is. And the way that we account for those things is not in the journal, but in the ledger. Okay, so all of this stuff's going to end up in the ledger as balances that are brought down. Okay, so bank. Now, the bank account has a balance of $5,000. Now, bank is an asset, so if it's got a balance of $5,000, that must be a debit. It's got a debit value of $5,000. Now, you might say, what's the matching transaction? Because usually when you post to the ledger, you've got a matching transaction. We just say balance brought down, BD, balance brought down. Now, the next one I'll do this in real order. The next one I'll do is the vehicle. Now, again, the vehicle is an asset, so it's going to go on the debit side. And that's going to be balance brought down. Accounts payable. Don't abbreviate it like that. I'm just being lazy, but you guys are better than that. Now, accounts payable has a value of $9,000, but accounts payable is a liability. So if it has a value of $9,000, it's going to go on this side. Balance brought down. Now, one thing I should mention that I've been forgetting is that all of this is happening on July 1st. Last one, the capital. Don't know. But we do know that everything needs to match up, left-hand side, right-hand side. So I've got $5,000 here, $10,000 here, $9,000 here. That means I've got $15,000 on the left-hand side, $9,000 on the right-hand side. So the balance brought down when it comes to our capital must be 15,000 minus 9,000. That's 6,000. Everything should line up. Everything should be neat and tidy. There's your basic idea. Okay, so if you're starting a business, you're going to have to do some sort of transaction in the general journal. But if you are continuing a business, no transaction. You're just going to have to bring these balances down, brought down, balance brought down, boop, 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 and then you might get an unknown. It wouldn't have to be the unknown capital, but as long as you've just got one unknown, you can figure it out by matching up the left-hand side with the right-hand side and making sure they're equal. Okay, that's a continuing business.